Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. I hope you guys had a good week trading this week. Today's Friday, after hours, and we are seeing about 4%, I believe about 4% correction. It was about 4%, I guess, at the lows, but so far about 3.15% corrections here. Is anybody freaking out today? Because if you are, you truly don't understand how to be in the market and able to withstand corrections like these. Because if you're not able to withstand corrections like these, well, I guess you just have to be a day trader. I know I always knock down day traders, but anyway. Let's do a little. Actually, before we get into it, as usual, let's start. Let's start with Spider, Diamond, Qs, Russell, Semi, and the banks. And as you can see, S&P is still up 18% year to date. Nasdaq is still up about 23. Semi's up 30%, and I still think S&P could do 25% more. End of this year, by the end of this year, Nasdaq could do 30, 35. If things are real good, we might be able to do more. But I think 25 on the S&P, 30, 35 on the Nasdaq. It's kind of what I think it's gonna be by the end of this year. I think the banks also gonna do well by end of this year. I think the banks and the small caps, they've been lagging. I think they're gonna start catching up. Diamond has been the most lagger out of all the ones that we see here, the index and the sector. So anyway, let's do a little bit of maintenance here. Last week I gave you these two levels, 295 and 293. We kind of went and filled all these gaps. And yesterday, actually what happened on Thursday though, it was we actually found support on this gap area, which I gave you that 295, right? And then it was actually bullish, and then I think it was the Fed minutes or something, and then and then it just started coming down pretty hard. And today we gapped down. It was a lot of volatility. So through this move, this 3 days downturn, actually it was more, it's like pretty much this whole week, right? This was Monday, Tuesday, Wednesday, Thursday, Friday. We filled this gap. We filled that gap. Or there was a gap. No, we filled this gap first. And then we filled this gap yesterday. And then we filled this gap today. So all these gaps were filling. And let me put that there. So let's do this. Because there's a gap still remaining in this one, right? So a lot of these gaps were filled, and today we finally see that this gap was filled, and then bears come down trying to retest this area. Remember that gap? There's a gap here that was never filled back in June 25th. You can see that partially filled, and that acted support, and then that's when the price got up. Price came back down, was not able to fill this gap, fill that gap, but was not able to fill this gap, and the buyers did step in. So you can see we got a little bit of hammer kind of look here. It has some properties of potentially bullish type of connotation in this candle, but like any other candles, it needs a follow through. Kind of like you can see we saw the candle here and here, same candle as this one. Didn't see a follow through. We brought right back down, and then you can see we saw a spinning top, and then we saw follow through with a gap up and strong bullish reversal candle, and then you can see that's what that led to, that move back in June. So this candle as of today doesn't really mean anything until we see a follow through, which we'll talk about early next week. And follow me at 2K Kim, and I do post charts and things throughout the week, not every day, but when I deem necessary. And we've been talking about this level here, right? This is the what I call rising pivot. of this rising channel. I know some of you guys are going to say, okay, that's not really a channel because of this. I know that. I'm calling it a channel with the flop in between or trap in between, just so the market could shake out the weekend, so the market could shake you out before makes its run. So that's kind of what this channel means, parallel to each other right here, as you can see, right? So we got that resistance. Some people are calling this a triple top. That's not a triple top. That's not how triple top works. I'm calling, I think this is gonna be not as significant. I said this last week. 3 to 4% decline is not significant at all at this point. So you know what I'm gonna do? I'm gonna actually throw a little bit of Fibonacci area right there. So it's a short-term Fibonacci analysis to just measure this to that. Currently, we did find support, the first level Fib, which is coinciding with that. We got 100 SMA there, 100 SMA there, and the gap area. So that's where we found support, right? And actually, there's a gap here too, right there, which then let's do that, right? Let's do this. I'm gonna move this. We got 3 levels that I'm gonna give you for next week, right? If we don't see a bounce early next week and we see the price dripping lower, the next level to watch is, you know what? I'm gonna actually put it down like that, 289. Because 289 is a gap fill, and we got the 100 SMA right in that vicinity. Remember that 100 SMA did act as, you know, I'm gonna actually, let's see if I can tighten that 100 SMA here. Nope, let's do this. Nope, let's do that. Yeah, I think that's best because I'm trying to see, say 100 SMA did act as resistance here and here. It scooped it lower, right? And then it kind of got up here and we're back at it. So 289 will be a gap fill, which is, you know what, I'm just gonna do this actually, because since that's kind of where we saw that move today. And then we got 100 SMA around 289. We got the 50% retracement at 287, and then we got gap area at 284-ish. So I think those levels are gonna act as pretty strong support. We have that gap down here. I think that will be important. That gap needs to be filled immediately, as soon as possible, or the gap gets filled and then it comes back down to challenge this gap, right? The best way for the bulls to recover from this will be gapping it up, turning this into an island bottom. So basically, you'd want to see this thing, gapping up above 295.36. And you might ask me, do we have island top on the spider? It's not traditional island because you can see because of that wick. So this was a gap. This gap definitely open, but this gap is closed because of this move, right? If this was completely open, then I think it's gonna be, this would have been an island top like this, but you can see it's open on the other side. Here, I wonder if you understand what I'm saying. It's open this side, so you can see if this guy goes up and then gap it up. Let's say this thing maybe Monday it grinds higher a little bit, and then Tuesday if it gaps up, you can see the gap is open, both sides, downside, upside. So this becomes island bottom. For the island top, the gap was closed. See right there? If this was gap and then there's no wick here, then indeed you could call this island top like that. But we don't have island top because of this gap, was because of that lower wick. Do you see what I'm saying? That wick. If there's no wick here and it was, then it wouldn't gap down. So instead of this thing coming down with that wick, maybe it would have closed right here and then gap down next day, then that would have been island top. So we don't have island top. We don't have island top on the S&P, but we got the gap down. So that would be the best way for bulls to bring it up without, worrying about this gap. Because this gap, it's going to make things a little bit hectic, you know, if it doesn't get filled right away. And even if it gets filled, once it gets filled, it's going to act as resistance. It will be better though for it to get filled and then pull back to, you know, retest this gap area in the 100 SMA, rather than if it kind of like fizzles up and it fails to fill it and then comes back, then I think for sure we're going to come and fill this gap, because it will be more stronger bearish after that when the bulls attempt to fill the gap, it doesn't fill the gap. It's the same concept, the same logic. You see right here, this gap. There was a gap. Bulls got up, brought it back down. What does a bear do? Bears left this gap open. They did not fill this gap. Do you know what I'm saying here? This gap was not filled entirety of it. And then what did the bulls do? Really took an advantage of that and brought it up. Same concept here. If bulls doesn't fill this gap and fizzles here and not able to fill it, then it's gonna probably come down and fill this gap at 289. So I think next couple days of next week, several days of early next week, we might have we can have a pretty good gauge of how the market's behaving in between this gap and this gap. You know what? I changed my mind. I want to put this right here. So we got this gap and we got this gap we're working on. And we got 100 SMA just below it. We're actually below the 50 MA now. So it'll be interesting to see how the market plays out in 294, 295 versus 289. So those are the levels watch there. Let's go to Diamond. So let's do a little bit of maintenance here. All those levels has been broken, so let's get rid of that. This maintenance here. Okay, so these level has been broken. So, but the gap was not filled. So again, we just talked about it on the spider, where when the gap is not filled entirety of it, what does it do? It actually favors the direction of that gap. So what is that direction of this gap? Up. Bears brought it down. It actually found support right on that 100 SMA, but was not filled this gap here. Here, I'll blow it up and you'll see the gap is still open. This is where it's closed. It gapped up next day. So if I draw a line, the gap is open. And that gives more bullish connotation on the diamond because of that. Unless if bears want to kill that buying pressure, bears would really need to come back down and fill that gap very, very quickly. However, if this thing fizzles a little bit, then there's a good chance this can get right back up. We actually do have much better looking bullish hammer candle there. Long lower wick. However, we've seen something like that before, never saw upside continuation, so we saw another downturn, and we saw doji, we saw gap up, we saw reversal candle, and then that's how it reversed. So that hammer need a follow through. We don't have that yet, so we'll see. Let's watch it next week how it plays out, but I'm going to give you 263, 261 vicinity. It's a level to watch, and I can also probably do the same thing here like that. So we got that. You can see that first level of fib is coinciding with that 100 SMA and also the gap area, and that's where we found support. That's where we saw dip buyers coming in on the Dow Jones Industrial Average. Let's go to Qs. Qs fill that gap, but there are many gaps on Qs. So here, let's do this. So I gave you those two levels last week, 188, 186. That's where we traded today and end the week this week. So we fill that gap, entirety of this gap. See that? And then I'm going to do this. But bears opened up this gap. Is this an island reversal? No. See? This was a gap. So there's no island top. This was a gap right here, and there's no island. If this gap would have been down here, it would have been, but there's no island. So what we're going to do is, however, we got the down gap. That down gap must be filled quickly or it's gonna struggle below that level. So if the down gap, if this down gap doesn't get filled right away, it's probably this gonna probably come back down, trying to retest that gap area. However, if this thing kind of gets up here a little bit and then gaps it up, that will be an island bottom. So again, it will be interesting to see how the market, the NASDAQ behaves in 180, 190, 185-ish, right? This two level we're gonna watch throughout next week. And if I see anything, I will tweet things out at 2KKim. Let's go to Russell 2000. Russell 2000, a little bit more messy here. Let's just zoom in, talk about it. I don't think the entirety of the gap was filled. See, that was a gap. You see that? Yep, this was a gap. So last week I gave you 154, 150, and 149. We didn't even get to that level. So what I'm gonna do, you see that there, this is a closing price back in June 26th, and it opened up here. So there's a gap. So we held that level. So what I'm gonna do, and there's a small gap here too. It's a very small one, like that. So I'm gonna give you two levels. You can see there's a small gap. So 151.25 and 149. But there's this down gap, same scenario, right? This gap needs to be filled or needs to gap it up, make it into an island. Otherwise, below this gap, if it doesn't get filled right away, gonna come back and challenge this down gap. So I'm actually gonna do this like that. So we got this gap, we got this gap. The gap, entirety of it was not filled. Continue with the semi. Semi pulling back, but let's get rid of that. We're finding support. We're finding support at 50 MA. Let's do this. We're putting fib all day, so we got these two levels. I'll give you these two levels on the semi, right? 110.71, 107.86. Right? So we got some jerky action here, but that's kind of what it's gonna do before it gets to smooth primary term uptrend. But we've been cultivating higher lows and higher high. These are higher lows, and potentially this is gonna be a higher high before making next leg run. Bank's been leading today. So let's zoom in here. And so I gave you 27.83, 27.59 last week. We came and filled that gap. You can see we found support at 100 SMA, and this gap hasn't filled. We're right back at 27.60. So the last level that I gave you, 27.59, that's the level it held. And so let's get rid of that. Remove that, some of that. And that uptrend support I drawn right here. I gave you the level last week also. So that's kind of like where we're at right now, that level, right? Here, here, and here. And this gap got filled. And this gap is not filled. There's that small gap. Right there. You see that little gap? So that's what I'm going to give you, 2707, 2609. Kind of want to do fib here too, like a short-term fib. So you can see we're finding support at the second level, the 50% retracement. The last level is coinciding with that gap area, and also 100 SMA is hoovering this area. So this is actually strong support vicinity. And then we also got the long-term uptrend support here, like a intermediate term uptrend support. So I think, and then we saw that pretty big lower wick there. And this thing looks most bullish as far as the candle is concerned. If we can see a follow through, then there's a good chance this could continue higher. There's no gap down on XLF. So there you have it. Let's see how the market plays out next week. Again, you can follow me at 2K Kim on Twitter, and I do, tweet out charts and things throughout the week. So we'll see if we're gonna see any kind of a island bottom, by gapping up, or is this gonna kind of get up a little bit and gap it up and do an island bottom here, or are we gonna go and fill it, pull back a little bit, retest that gap, and then go higher? Or are we gonna not fill it and then come down, fill this gap, and then make things a little bit more hectic in the short term? We're probably gonna have more answer for that or of that next week. So we'll follow up again next Friday, and we'll go from there. You guys have a wonderful weekend, and good luck trading next week.